A mortgage investment is at the center of a closely watched fraud trial of a former Goldman Sachs trader. Now, you may not know the name, but to many, Fabrice Tourre has become the symbol of Wall Street greed that defined the financial crisis. Tourre is accused of misleading investors and secretly helping hedge fund manager John Paulson construct the mortgage security he could then bet against. It's the highest profile trial to come out of the financial crisis, investigations by the Security and Exchange Commission. The civil case is also getting a lot of attention because the government is basing its case on many emails sent by Tourre. Back in 2007, he referred to the financial markets as the whole building is about to collapse any time now. Today, in a Manhattan courthouse, he took the stand to testify in the trial. Our Mary Thompson was inside the courtroom and joins us now. Mary, what stood out? What did Tourre say?
Well, Tourre was very energetic, very confident on the stand today. In fact, he was so energetic, he actually at one point knocked off a container of water from the stand. It was covered, so nothing was spilled. But he was responding to the SEC, which came out swinging today, Tyler, immediately going to emails that he wrote suggesting that Paulson's hedge fund actually had a long position in the security in question, this being a synthetic CDO called Abacus. Now, Tourre admitting on the stand that those emails were both inaccurate and misleading, or I should say inaccurate about Paulson's position. He said, "I wasn't trying to confuse anyone." But again, the SEC pounced because, as you suggested, the SEC is trying to convince jurors that Tourre deliberately misled investors that Paulson's fund had an equity or long position in the fund, something that would make them more confident when indeed Paulson actually had a short position, which allowed him to profit considerably, basically to the tune of $1 billion.
Mary, let's fast forward a little bit. What's at stake for Tourre if he loses this case?
Well, again, this is a civil trial, so he won't be going to jail, but he will likely face fines and penalties if found guilty. He also could face possible bans from the securities industry. Keep in mind that Mr. Tourre has left Goldman Sachs, and he's currently in a PhD program in economics at the University of Chicago.
Mary Thompson, thank you very much.